Blockchain and Web3 are changing the game in business. 90% of executives agree that these technologies are helping forge stronger, more flexible partnerships and unlock new sources of value. They are key to modernizing commerce, making operations more transparent, efficient, and ready for the future. And Accenture is playing a major role in this transformation. As part of our Global Blockchain Business Council's Markets on Chain series, I am joined by John Lee, the Global Managing Director at Accenture. So, John, great to have you here.
Thanks for having me, Jane.
Now, you come from a traditional finance background, so you probably feel comfortable here.
It's like home, actually.
So what made you decide to focus on blockchain and digital assets?
I would say it was probably by accident and by chance. And sort of when I was at the Toronto Stock Exchange, the Canadian equivalent of what you see behind us, this was right around the time where blockchain was just kind of taking off. And what you started to see was this big proliferation of, I'll call it noise, where there were accusations or claims that finance was going to be completely changed. The way that we did business was going to change. And obviously at the exchange, this caught our attention. It was something that we needed to look at. So I wasn't a crypto evangelist by any means, but I started to really look at the technology to see how it can transform. And that's sort of how we got involved. And here we are now.
Okay. So now what trends are you watching the most closely now? There's, of course, tokenization has been getting a lot of attention. Cross-border payments has been interesting for a few years. Identity. What do you think has got the most traction and kind of moving away from hype and into reality?
Yeah. And I think that's a really, really good question, because one of the things that unfortunately you see in this space is a lot of hype and then not a whole lot on the carry through. But I do think that one of the things that we've been looking at is not only systems that have moved from the idea of a prototype or a pilot, but when they go live, are they actually doing anything? Are they actually transacting? So we're starting to look at transactional flows, looking at transactional volumes, and then trying to look at how many counterparties need to actually talk to each other. And so as you're starting to see sort of the maturity of the technology, you're starting to see a lot of interactions, and I'll call it some of the more boring challenges when you start looking at big scale production implementations. And that's where we've been involved lately.
Okay. Are you seeing any trends there or anything that you think shows particular?
Oh, yeah, absolutely. And I think even the nature of the conversations that I personally have been having with a lot of the clients that we have, they're moving more from sort of the 101, please explain to me the value of tokenization and why I should care. So a little bit of the hypothetical academic, and we are way past that now. And we are now looking at graduating some of these proof of concepts and prototypes going into production. And a lot of the volumes that we've started to see, it's gaining a tremendous amount of momentum, and it's probably driven by a lot of the regulatory clarity that you've been seeing in the last 6 to 8 months.
Yes, that's right. So it's been a big year last year for the whole industry. So what role is Accenture playing in the helping capital markets clients study and transition to blockchain technologies?
Well, I would say Accenture's, even when I was a client of Accenture's, it's a massive scaling organization. And one of the things that Accenture does really, really well is help our clients kind of take through that journey of innovation. And it starts right at the beginning of, I don't know what I don't know. Please explain to me how I should look at this. We put it in a practical context of their business operations, their business modeling. And then we actually take them through the journey and ultimately not just the product side of things and the technology side of things, but actually how you can go to market. And it's kind of like us being a strategic advisor and a partner to actually get them to a production state. And of course, a lot of our vendor partners rely on us to actually deal with a tremendous amount of the enterprise scaled implementations.
Okay. Now, you've written about distributed ledger technologies, how it could streamline the process of green bonds in particular. So could this apply to other financial instruments? Is it kind of being able to be can you move it to other things as well?
100%.
Okay.
And so the reason green bonds came up, and I was very passionate about the sustainability agenda, is that a lot of what you see around green bonds requires data. and reliable data that can't be manipulated and tampered with. And so when you think about blockchain technology, it's really about data and how resilient that data could be. When you start looking at the supply chain elements of how you deal with green bonds, and it's really just a flavor of debt finance, you can then take that and apply it to a whole bunch of other assets as well. And anything around the provenance of data and being able to validate, which, it's the entire gamut of things like identity verification, dealing with transactional validation, ultimately post-trade clearing and settlement activities. And these are some of the things that that blockchain technology can actually do in a very different way.
Yeah. Now, what might financial market participants, so traders, investors, institutional investors, what can they expect to see as tokenization becomes more mainstream?
I think we're starting to see it now. I wouldn't say it's completely mainstream, but it's getting awfully close. But you're going to start to see these alternative form factors of, and I'll say, more financial instruments that you can actually transact against. Maybe some of these assets were not commercially viable in the past, and especially when you start looking at investors that want to look at portfolio diversification, they want to look at how they can increase yield, they want to look at some high-risk investments and having some percentage of their portfolio access it. It's all about how can a trading desk provide that for their clients. And what you're starting to see is the beginning of that. And, a lot of the mainstreams and conventionals are actually looking at issuing money market funds and bonds in this form factor. But that's just the beginning, because I do think that once you get that base infrastructure out, you're going to start to see alternative assets that can come to market.
Okay. So, that's what you're seeing. They're kind of using it for one asset, building the infrastructure, working out the kinks, seeing how it works, and then maybe expanding it to other.
Absolutely. And it's not a regional specific phenomenon. As the global lead, one of the things that I am fortunate enough to see is a very big macro landscape of how this trend is actually transforming global capital markets as well as banking on a global scale. And in every continent, major economic region, you're starting to see these activities actually moving forward. So that whole inflection of adoption is moving past the prototype experimentation stage and actually moving into live readiness and real value actually being transacted.
Now, Accenture has been deeply involved in the GBBC's Global Standards Mapping Initiative, the GSMI. So why map standards instead of creating new ones? How does this approach seem to work?
Yeah, this is a really good question, because we were actually trying to figure out how do you help the industry actually go and move forward and adopt. And one of the things, especially when you start to look at emergent technology, is there are no established standards yet. And so you're starting to see a little bit of fragmentation. And as these systems are starting to go live, they realize that in order for you to actually scale up, you need to interoperate with your counterparties. That may be on a totally different standard. It's not well understood how you can actually map those, because there was no reference point to say, this means that in this system, and that means this in that system. And so what the GSMI actually did was to try and map them. The idea of trying to create a net new standard, I thought it was probably not a good idea, because the last thing you want to do is add more confusion. And so what the GBBC had done with the GSMI series is actually provide the thesaurus of everything that's going on. And even some of these terminologies, there's still 2, maybe 3 interpretations of them. And so we map them so that at least you can reconcile and rationalize what things mean, so that you can actually ultimately put the...
Makes sense, that everybody's on the same page.
That would work, right?
Absolutely.
Yeah, exactly.
Now, many projects are moving from kind of pilot projects into a more implementation. In your experience, what signals that a project is ready to scale like that? How do the standards and the reference architectures reduce risk then at that stage?
I would say when we start to look at production readiness, when you start to see some of the questions that are coming out and they become more granular in terms of how do I deal with operational risk? How do I deal with compliance? How do I deal with systems readiness to be able to conform to things like the PFMI? These are all, I'll call it boring questions per se, but they are very, very important in order for you to actually abide by a lot of the regulations and the reporting obligations that you have as licensed financial institutions. And this is where you're starting to see a critical mass, because regulatory clarity has come in 2025, which has given a lot of the organizations a green light to actually move forward, because they now have some clarity on what they need to do in terms of operationalizing some of their systems.
Okay. And John, as we wrap up here, I mean, what do you think is the most important thing the industry still needs to get right to make sure that tokenization and it's scalable and trusted?
I would say that the number one thing right now, and we are starting to see it, two fronts: the interoperability conversation and how you can actually connect systems that were initially developed kind of in isolation from each other was very, very important. But I would say the biggest one is tooling and how you could actually support some of the functions like surveillance, supervision, compliance, any of the investigation activities. I think there is still a little bit of work that needs to be done on that front, but it's been moving very, very quick in that space. And as you start to look at Web3 technology, the idea of how you can actually bring some of these data attributes together in wallet infrastructure, for example, that can really change things around how you deal with KYC, I think is going to be a huge game changer.
Okay, John, thank you so much for joining us on the Markets on Chain series.
Great. Thanks again.